So welcome back to another video. In this video we are going to discuss about the share of a banking sector, which is Canara Bank share. So this stock is trading at around 360 levels. In previous 5 days this stock has given a huge and fabulous return of 5 to 6%. In last 1 month it has given a massive return of 10%. In 6 months it has given around 30% return, and in last 1 year it has almost given 47%. In last 5 years, as you can see that from pre-COVID level to this stock down, and immediately that recovered, and from this down you can see that 347% return, which is a fabulous return within just the span of only 3 years. Is there any further movement possibility in near term? As you can see that this stock was very fluctuate in recent past, but now this stock is showing that consistent growth. Whenever the stock goes down of 5 to 10%, it immediately bounced back and given a huge amount of return. So now this stock has given a recent breakout, so there are further possibility of movement like this and this in this situation, and it easily touch 400 levels. So why this stock is going such consistent growth? Because due to the strict guidelines of RBI, this stock is performing such higher EPS growth, higher earning growth. As you can see that the stock performance in last 5 years is enormous growth in profitability, in revenue. Accordingly, the stock also moved in share price. So basically now it's trading around only PE of 5. So if the investors confidence will improve about the stock and the EPS is also improving, so the stock performance will also improve. Now let's do a detailed fundamental analysis. Now in revenue growth you will see that from 2015, from 48,000 to 2023, and in trailing 12 month it moved around 1,19,000, which is a fabulous growth of more than 100% in just the span of 8 years, 7 to 8 years. Accordingly, the EBITDA also increased from 4,000 to 16,000, which is 4 times. The net income, it has also increased from the level of 2,800 to almost around 12,000, which is more than 4 to 5x in jump in just the span of 8 years. So because the stock was not that performing well in past, now it has improved significant. As you can see that in recent past it has posted around 206 to 2,600 crore of loss and 3,900 crore of loss, but now the stock is performing a consistent profit growth and huge amount of growth in recent years. So EPS also increased from 59 to 67. In recent times it was around 8, but now it's around 67. So in just the span of 4 to 5 years there are huge development. Public sector banks, as I made another video where all the public sector banks, whether SBI, Bank of Baroda, Indian Bank, all stocks are carrying such huge amount of growth. In pure comparison, as you can see that this Canara Bank is paying a huge dividend of 3.29%, which is almost double of SBI, and Bank of Baroda is also paying 2.60%. So this sector is also pays a huge dividend, but this is the paying huge dividend of 3.29%. So its P ratio on the other side, if you'll see that only carrying around 6, and SBI is around 9.58, Bank of Baroda is 7. So in the investment opportunities you can see that this is at a very lower valuation. Promoters holding very consistent from previous quarters. You can see that promoters are not selling stocks and they are holding consistent. On the other hand, there are retail category has also significant reduced from 13% to 12%, and DII also remains constant. So this shows that there are not that much amount of volatility and a consistent performance growth. So if this will continue to stable, and as the RBI strict guidelines is maintaining this amount of growth, then if the P ratio that investors confidence will build up, then from 5 to around it around goes around 10. So accordingly your money and share price can also double from this point. So you have to wait and see that whether this is going to stable or not, and accordingly your investments will double. So if you find that this video is helpful, please do consider to like this video and subscribe to this channel for such type of detailed analysis. Thank you. See you in next video.